and I'll go ahead and get us started. Thank you all for joining us. We're happy to have students and scholars here for this webinar today. My name is Jenna Bustamante. I'm the program supervisor at Dashew Center, and I'm joined today by a number of our Dashew Center staff, as well as staff at Wescom, who is our official banking partner here at Dashew Center. So I will go ahead and introduce my Dashew colleagues, and then I will go ahead and kick it over to Wescom to get us started with this financial literacy webinar today. So I'm joined by Andrea Sepulveda. She is one of our F1 counselors at Dashew Center. We also have Helen Martinez, who is a J1 counselor. Caroline Thrailkill is our communications coordinator, and Natalie Sin is our programs coordinator. So they are Dashew staff joining today. They'll have some slides, they'll help with Q&A later. So thank you all for being here. And I will go ahead and pass it off to David Boctor at Wescom.
Thanks, Jenna. Good afternoon, everybody. We are excited to be here with you. And like Jenna said, we are Wescom, the official banking partner of the Dashew Center. And before I introduce everybody, I wanted to share with you a little bit about Wescom for those of you who are not familiar with us, and then we will jump right into our credit presentation. So just 2 minutes to share information for those of you who have not heard of Wescom before or are not familiar with us. We are the official banking partner of many UCLA partnerships. We have been around since 1934. We're very similar to your traditional banks like your Wells Fargo, your Bank of America, your Chase, except in my opinion, we're a lot better. And the reason being is we are not for profit. So we are here to serve you, and in particular, the Bruin community. We have 24 branches, and I will share with you information about our UCLA branch in a minute. But like I said, we have a lot of official banking partnerships with UCLA. We are the official banking partner of UCLA Athletics, Campus Life and Recreation, the Alumni Association, and as we mentioned, the Dashew Center for International Students and Scholars. The website that you see right here is a dedicated website for you if you have any information that you're looking for as far as opening an account or any information that Wescom in particular can offer you. I urge you to visit this website. It's a great resource for you. And like we said, we're here to help Bruins build better lives. We have our campus branch, like I mentioned, at Ackerman Union on the first floor across from Panda. Our hours right now are Monday through Friday from 10 a.m. till 5 p.m. And on Saturdays, we're open from 10 to 4. Martha, who is our branch manager, may be popping in a little bit later, but her contact information is here on the screen. But I'll also be sharing that with you at the end of the presentation if you wanted to take that down, as well as my information. So before we get started, I want to quickly introduce a couple of people that are here from Wescom joining me. My boss is the Vice President of Partner Development. Her name is Ashley White. She's the one that oversees all of our UCLA relationships. So she is joining us, as well as Lorena Martin, who is our Consumer Lending Senior Underwriter, and she will be kicking off our presentation for you. So Lorena, before I kick it off to you, please make sure that you participate in the chats if you have any questions, or if we don't get to you right away, it may be because your question is going to be coming up in a future slide. But I assure you, we will address all of your questions. We're going to have plenty of time at the end. And for a couple of lucky participants, we are going to be awarding $25 UCLA Store gift card, just to say thank you for being here with us today and participating with us. So without further ado, Lorena, I will turn it over to you.
Awesome. Thank you so much, David. Hi, everyone. So my name is Lorena Martin. As David mentioned, I'm the Senior Consumer Lending Underwriter for Wescom's Consumer Lending Originations Department. Just a little bit about myself. I've been with Wescom for going on 16 years now. As an underwriter, what I do is I help in reviewing and evaluating the credit risk from our potential borrowers, and also trying just to offer the best way for our members, our potential members, to achieve their financial goals. And in cases like this, we definitely love sharing our knowledge also with others, just to kind of help offer a little bit more insight as to what credit is, how it works, and how it can be a benefit to you. So once again, thank you so much for taking out the time and allowing us to share this information with you. As I mentioned, today's goal is really to offer a closer look and a better understanding of what credit is and how it can help you in the long run. So with that said, let's go ahead and take a look at our agenda and share what we'll be reviewing today. So first up, what we want to do is we want to review the differences between the terms credit and debit. So, universally, these words can sometimes mean the same things, but what we'll do is we'll delve into some of the main differences of how we use them from a financial standpoint. And then we're also going to be covering some credit lingo. So some words that are common in the credit world that personally I would have loved to know when I started my credit path initially. So, hopefully those will be some words that can help out. And then we'll also touch on some of the basics of what a credit report and FICO score is, and also what FICO score means and why it's so important to monitor those two things. And then we're also going to be touching on how underwriters review credit, and mainly having to do with the 5 C's of credit. And lastly, we're going to be going over the different type of loan products available through Wescom, including some additional ones specific for UCLA students only. And then from there, we're going to go ahead and toss it back to our Dashew team to go over some Social Security information regarding to J1 and F1 visas. So we have a ton of information prepared for you. So let's go ahead and get into it. So for starters, what is the difference between credit and debit in the financial realm? Well, credit is when you borrow money from a credit card company, say, and are billed at the end of every month for the amount that you borrowed, or you're paying it back over time with a minimum payment. So these are typically like your Visas, your MasterCards, your Discover logoed cards. That's basically what we're looking at. Debit, on the other hand, is basically when you have money readily available in your checking account, and when you use your card, the money is taken from that balance immediately. So these are the cards that you typically get from your credit union or your bank, that when you use at the store, the money gets taken out immediately from your checking account. On our next slide, we show some of the main differences shown for credit and debit. So credit allows you to have a credit card with a bank or a store, as opposed to just having a card linked to your checking account, like we mentioned earlier. When you're using credit, you can pay what you owe over time by paying those minimum payments from a bill that you receive once a month for everything that you purchased. One thing to consider with credit is if you do not pay the full balance of what you borrowed immediately, you are paying interest for borrowing that money, unless you have like a 0% rate, which is really pretty rare nowadays. So, one thing to kind of consider again when you're looking at paying credit over time. Whereas with a debit card, since the money is coming directly from the checking account, there's really no extra money going towards any interest, since there's no money that's being borrowed. You're using your own funds. One final difference between credit and debit is that credit actually offers you the opportunity to build a credit profile, showing just how responsible you are with borrowing and paying it back in a timely manner. This also helps when you're looking to purchase larger credit items such as autos or even a mortgage in the future. Debit cards don't record this type of information. They don't keep record of this for a credit profile. So that's one big main difference between credit and debit. So next up, we have some credit lingo that, like I said, I feel like it's helpful to know, especially when you're working with credit related items such as loans. So first we have the difference between secured and unsecured. So secured credit is when a loan is guaranteed by collateral. So often it's going to be the auto loan and the auto loan, or the auto in the auto loan, or even your own funds as a small deposit, which could be used as a limit for like a secured credit card. Unsecured is when the money borrowed is not guaranteed by any collateral. So these are usually like your regular credit cards, personal loans, and lines of credit where you're not putting anything up as kind of as a security for that loan. Next up, we have some credit terms often found on a monthly statement, such as credit limit, which this is the maximum balance that you're allowed to have on your credit card. and available credit. This is the amount available for you to spend within that credit limit amount. Minimum payment is just that. It's the minimum amount that you have to pay before the due date. And we're also going to touch later on how it can help your FICO by paying a little bit more than the minimum payment and lowering the balance on your credit card as well. Some other terms that we find often are utilization, and this is the percentage of credit that you've used. And every credit card has something called a billing cycle, which is a set amount of time that to record payments and purchases before the next statement goes out. So once the billing cycle is complete, you're provided with a statement balance, which is the amount in payments and purchases that you've made. Now keep in mind, it's kind of similar, but it's separate from the current balance. The current balance is the total of money that's owed currently, including any transactions that have happened since that statement balance was generated. Next, you have your annual percentage rate or APR, and sure, many of you have probably heard that on like car commercials and things like that. This is the interest rate that you're going to be paying or that you would pay on purchases every year. So the higher the APR, the more that's going towards interest versus what you borrowed. Annual fees are pretty self-explanatory, with them being the fees that you have to pay annually to use the card. And then cash advances and balance transfers. These are services that are offered for some credit cards. Cash advances offer the ability to withdraw cash against the credit card limit, and a balance transfer allows you to move over a balance from one credit card to another. Again, these are services that are found on a lot of different credit cards. One thing to note though is these are some services that you may be interested in doing in the future, I would suggest just looking to see if there's any additional fees to them or if the rate itself is going to be higher for doing these type of transactions, because sometimes that is the case. Alrighty, now by show of hands, you can raise your hand on the Zoom. How many of you are familiar or maybe have seen a credit report before? Okay, good, we got some. Perfect. Alrighty, so for those who maybe aren't familiar with one, a credit report is a statement that has information about your past credit and payment activity. It also depicts your current credit situation, such as your loan paying history and the status of your credit account. So, for example, it shows if you're making your payments on time or if you have too much debt outstanding. The information from your credit report is actually then converted into what's known as a FICO score. So the FICO score is a 3-digit number that's calculated from the information on your credit report. And this can range anywhere from as low as a 300 all the way to 850 typically. Now, it's a measure of consumer credit risk. So in other words, this score helps underwriters like myself predict how likely a consumer will pay back their credit obligation. So the best kind of way I can think of it, or that you can think of it as well, is that a credit report is like your report card really about your payments that you've made, and the FICO score is like the grade. So that's kind of one way that you can kind of look at it. The 3 major consumer reporting agencies who utilize the FICO score are Experian, TransUnion, and Equifax. Some lenders use the scores from all 3 agencies to help render a rate or a decision. But for Wescom's consumer loans, for example, we actually only use the FICO score generated from Experian's information. Now, there are various versions of FICO scores. So if you happen to pull your credit maybe at one location in the future, you may notice that your score is different than that of another lender. It all really depends on that institution's versions of what they're using, based off of their lending structure and what they're looking for as far as risk factors. Now, in the next slide, we have a sample of what a credit report might look like. And that information typically includes your name, your address, and your payment history. So it's going to include any aliases that you've had and any prior addresses as well. One thing to note is that if an address where you've never lived on appears on your credit report, it's important to review the rest of the credit report thoroughly for accounts that could possibly not be yours, as any inconsistencies, could possibly be a sign of potential credit fraud or identity theft. So, definitely keep an eye on that. And that's why one of the main reasons why it's so important to monitor the information on the credit report. The accounts themselves are usually listed. Oh, sorry, if we can go back a little. Thank you. The accounts themselves are usually listed in below the address section, which you can see on the sample to the right. With the accounts, you'll also have the credit payment history. And normally the report's actually going to show payment history going back for 2 years on any accounts reflecting on your credit. However, the entire credit file itself can go as far back as 10 years. So if you happen to have, say, a credit card that you closed, just as an example, 3 years ago, chances are it's going to show on your credit report, but it's just going to show as closed. Alrighty. And then now on the next slide, what we'll do is we'll go over, what goes into the FICO scores generated from that information on the credit report. So as I mentioned earlier, the FICO score is calculated from the information found on the credit report. And then this information is then grouped into 5 different categories and all different percentages of impact on your score. So first is the payment history, and this takes about 35% of your score. So you'll notice that this affects your score the most, which is why it's so important to make your payments on time once you start establishing credit. One late payment could impact your score significantly. Next is amount owed. Keeping a reasonable amount of credit open is important, as well as maintaining low balances. So one rule of thumb that we tend to recommend is just to keep your balances below 30% of what your limit is. Doing this actually helps show lenders that you're really not living off of credit and you're not maxing it out every chance you get either. Keep in mind, having one maxed out credit card could actually do more damage to your credit score than if, say, you had 3 below the halfway mark, because it's reflecting that one of the cards it has high utilization. The third category is length of credit history, which is 15% of your FICO score. This is a little harder to control, especially if you're new to credit, since you can't really change when your credit began. But if you have a more seasoned credit file and you close an older card, then you're essentially deleting that history that card provided, which could in turn affect your score. Next is new credit. So this has to do with the frequency of credit inquiries and new account openings, which affect your FICO as well. If you were to apply to multiple locations, it may seem to lenders that you're just applying everywhere, as opposed to shopping with care and keeping your credit in mind. So you really want to limit your amount of inquiries every time that you're going out looking for credit. Each inquiry that affects your score counts as maybe like 1 or 2 points towards your FICO. So another rule of thumb is to just keep your inquiry count, I'd suggest maybe no more than 3 to 4 times a year. With this calculation, you'd probably affect your score maybe at the most 8 points, as opposed to when you're adding more like 5 or 6, you could be bringing down your your FICO score almost by 10 points, which, could have an impact on a rate that you could obtain in the future. One other thing to note actually when it comes to this is, say if you happen to be shopping for a vehicle. If you purchase a vehicle at a dealership, a lot of times what they'll do is they'll run your credit to see if you can finance through any of their institutions. And they do that, maybe like 4 or 5 times, depending on what institutions it is that they're using. So one thing actually when it comes to dealership purchases is if they do happen to do an inquiry about 3 or 4 or 5 times within that same day, it actually only counts as one inquiry. So it doesn't affect your FICO score as much when it comes to shopping for vehicles for auto loans from the dealerships. And then the final category that we have here is credit mix. And you just want to make sure that your overall file that you create has a mixture of different types of accounts, such as retail accounts, personal loans, autos, and eventually a mortgage if you don't have one already. So as you can see, a lot goes into that FICO score and how it's determined. So it's all about really finding the right balance, which could admittedly take some trial and error, but once you do find that balance, it could help shape your credit into the profile that you want. Next, let's go over the importance of a good FICO. So, let's say David and I were looking to take out a loan for the same amount of $25,000 for a 5-year term. The only difference is that I actually qualified for a higher interest rate, or APR, of 10.78%. And he actually qualified for the lesser, which is the 3.28% interest rate. So, and this is because he's got a better FICO score than I would. So In this, I would be paying a total of around $7,449 in interest for those 5 years, whereas David's only going to be paying a little less than $2,140. So that means that he's going to be saving almost $5,300 in interest, all just for having that better FICO. So good on you, David, for having that good FICO. And then lastly, relating to credit, what we wanted to share also with you as an underwriter, as an underwriter like myself, when we're reviewing loans, when it comes to applying for credit cards or the loans, one of the things that we focus on are the 5 C's of credit. So this is really important when it comes to creating that credit profile, just to kind of keep these items in mind as well. So, for example, the 5 C's of credit are character, capacity, capital, collateral, and conditions. So character relates to the credit behavior. It's the information that we typically find on the credit report, right? This includes indicators such as the score and the payment history. So establishing a solid file with the least number of delinquencies can help support this positive character factor. Now, capacity, this is having to do with the capacity and the capability to pay back the loan. So in this case, we often review the amount of debt versus the income someone has. And this is reviewed just to ensure the prospective loan is not going to be putting the member or the prospective member in a tight spot financially. Capital relates to one's own money that they're investing into a loan. So this is typically found in auto loans as the down payment. Studies actually have shown that those who invest more of their own funds into a loan will pose less of a risk for defaulting, because obviously, they're investing in their own goal. So, you're not going to want to default on something that you've put your own money towards. Collateral, we mentioned it a little bit earlier. It's an asset that you pledge to back the loan. So again, in most cases, this is an example of this is going to be an auto for an auto loan. The vehicle is the collateral, and that could always be collected upon should the member happen to default. And conditions is the final 5 or 5th C of credit. And this is having to do with the market analysis or trends in the industry. So this ties to things such as rate, term, as well as like the reason for the loan as well. So again, it's really important to focus on these 5 C's because it gives a lender an overall picture of how likely someone is to pay back their loan. Alrighty, any questions so far regarding credit reports, FICOs, or the 5 C's? I'm not sure if we have any questions in chat yet.
Not right now.
Not right now? Okay, perfect. Alrighty. Now, another focus that we mentioned, pertain to having a good credit mix of different loan products as well. So, there are many different types of loan products available throughout the market. These are just a few of some that Wescom offers. And these are, like I mentioned earlier, meant to help along in whatever stage you are in your financial journey. So we'll review our most popular products and just kind of go over the differences of each one and how they could help in building your credit profile. So one of our most popular loan products are our auto loans, and these offer low fixed rates available for new or used vehicles, including refinances as well. For those new to credit, we do also offer a first-time buyer program, which offers an opportunity to establish an auto loan for members with little to no credit. And then next we have our personal loans. Now what personal loans are, these are closed-end loans, meaning there's a certain amount of time that you have to pay back this loan. Once that loan's been paid back in full, the money is no longer available to use. And these types of loans can offer the ability to pay for something up front and pay it back over time. Again, kind of like a credit card. It's just not available all the time. It's once you pay it back, it's done. And then you can often find these type of loans a lot of times once, maybe say like for debt consolidations or for vacations or things like that. Next, we have personal lines of credit. And these are more like the credit cards in that they are revolving lines, meaning that they stay open until you request to have them closed. Revolving lines offer you the ability to borrow, pay back, and then use the funds again without having to complete a new application. The only difference with the personal line of credit and the credit card is that you don't get a card that comes with it. It's just like an open share that you would transfer money from. Now, we do have several loan products exclusive to UCLA students. These include our Wescom private student loans, as well as the Smart Option student loan by Sallie Mae, which offer undergraduate and graduate loans with competitive rates. In addition to that, we do also offer our Wescom UCLA visas and technology visas, which, technology loans, which are primarily having to do with purchasing any computer goods from the UCLA store. The technology loan would be a great fit for any UCLA student. And then as far as the UCLA visas, with our next slide, we could touch on some of our UCLA visas that we offer, which are, for example, the Bruin Edge visa. This one's actually available to UCLA students, faculty, alumni, as well as fans. And this offers low variable rates with no annual fee. One that you may be interested in is our Bruin Choice visa, and this is exclusive to UCLA students only. So this one's a great option for students who are new to establishing credit, as it's offered for those students with little to no credit. And both of our UCLA visas offer great opportunities to earn reward points as well when you make purchases at certain UCLA related locations. So the points themselves can be redeemed for cashback, gift cards, sporting events, or concerts when they're used for purchases. And on this slide, we just kind of wanted to share some great highlights regarding our credit card programs, such as a 0% introductory APR for 6 months. Remember the APR is the annual percentage rate. So this means there's a 0% interest charged towards your purchases for the first 6 months. And then you also have some great opportunities, like I mentioned, just to earn extra rewards depending on where you use your card, including the places listed below. So if we don't have any questions, I don't know. I thought I saw something in chat, but I'm not sure if it was, oh, okay, no. But yeah, what I'll do is I'll go ahead and toss it over to Helen from our Dashew team to go over the Social Security process and what it entails. But if you do happen to have any questions relating to anything that I mentioned today, please feel free to include it in the chat and we'll definitely go ahead and answer that. So thank you.
Thank you, Lorena. All right, so I'm going to cover just very briefly who is eligible for the Social Security number and what that is. So for all J1 students and scholars, you are eligible for the Social Security number. And what that is a 9-digit number that makes you eligible for some types of government services in the US, like a driver's license or ID card. And it is required to receive wages and file taxes. So if you're going to be doing any of those things as a J1 visitor, you can apply for the Social Security number. And the way to do that is by visiting the Social Security Administration office that is located on Olympic Boulevard. We also recommend that if you do apply for the Social Security number, that you keep that number very safe, because that number is valid for the rest of your life, even if you return to your home country or if you return and then come back to the States. So just make sure to keep that very safe. If you have a J2 dependent, they are not eligible unless they have obtained work authorization through U.S. Citizenship and Immigration Services. So if they have received an EAD card, then they are also eligible, and the process is very similar to what you did as a J1 visitor. In order to apply for that Social Security number, you want to make sure that you have, of course, your passport, your DS 2019 form, your I-94, and a support letter from our office. There is an online request form that you can access on our website where you can request for that support letter, excuse me. So again, just make sure to have all of those documents with you. Visit the Social Security Administration office. There are several offices all over Los Angeles that you can visit, but our recommendation is the office on Olympic Boulevard, just because they are familiar with our exchange visitors. So make sure to visit that office if you can. Unfortunately, they don't take appointments, so our recommendation for that is either go really early or right before closing, and that seems to make the wait time less. Another note on applying for the Social Security number through our office as a J1 visitor is if you have just recently completed a J1 visa check-in, we ask that you wait 10 days in between completing that check-in and visiting the SSA, because it does take some time for the government systems to communicate with each other. So just to give them some time to do that, we say 10 business days. Lately, I've been hearing that it can take about a week. So if you want to take that risk, you can. But just to be on the safe side, that's 10 days. I'm gonna pass it on to my colleague, Andrea Sepulveda, who works with our F1 students, who will highlight that information for all F1 students. All right. So next slide.
Thanks, Helen. So I'll be discussing briefly, similar to the process for our J1 students and scholars. All F1 student visa holders are eligible to apply for the Social Security number. Similar to the J1 process, F2 dependents are not eligible for this. However, if you do receive work authorization through the U.S. Citizenship and Immigration Services, you will be eligible. So once a student has a job offer, they may request a Social Security support letter from us at the Dashew Center, and this should be requested no sooner than 30 days before the start date of your employment. That date is typically listed on your offer letter, or you can ask your employer if you're unsure. You will be bringing the following official documents to the Social Security Administration office, and we do ask that you bring a passport that should be valid for at least 6 months into the future, valid UCLA I-20. We do request that you pick up your UCLA I-20 with a wet signature, as the Social Security Administration is no longer accepting digital signatures for F1 student Social Security numbers. The most recent I-94 admission record, this can be found on the Department of Homeland Security page, and the letter that you'll be requesting from us can be requested online. And this Social Security support letter is a letter that you'll be bringing along with these official documents to the Social Security Administration. And they also ask that you bring a copy of your employment verification or job offer letter. And this should be on company header. It should have the official company head on top and should be signed by your direct supervisor or human resources administrator. And the completed SS5 form can also be found on the Social Security Administration office. Similar to the J1 process, we do ask that students give us 10 days for processing time, 10 business days. And this is just for us to verify that you are eligible, that the employment that you've received is eligible for the Social Security support letter to be issued to you. And once you receive your Social Security support letter, we do also give you a form of instructions on how to move forward in bringing your documents to the Social Security Administration and kind of what the process looks like after that. Thank you.
All right. Thank you, Andrea. Thanks, everyone. Great presentation. Right now, we're going to stop the recording before we get started with Q&A.